As markets expected, the European Central Bank has slashed its interest rates to a record low of 0.5%. With us to speak about the near-term effect of this and whether the current positive equity environment is sustainable for investors is our Head of Investment Strategy, Anja Hochberg. Anja, what's the main effect of the ECB's rate cut?
Most importantly, the ECB has acted and has therefore acknowledged that there is a growth problem. The pure economic and direct impacts, however, are, given the already low level of interest rate, not as much. We would expect the ECB to engage in further non-conventional measures, which helps to strengthen the monetary transmission mechanism, and especially small and medium-sized enterprise in the periphery should profit from that.
The positive environment for equities is expected to remain intact, but is it really sustainable for investors?
Absolutely. We expect that to last. That's why we continue to be overweight in equities. The markets are very much supported by central banks. The economy is only to temporarily weaken. We expect it to regain some strength in the next couple of months. And most importantly, market sentiment is not as euphoric as it used to be, for instance, at the end of the year. This, in our view, bodes very well for equity markets.
And what are the investment alternatives for those who don't want to be in risky assets?
Or risky assets or non-risky assets these days is a very relative expression. For instance, we wouldn't consider government bonds as totally riskless as well. We also have to search for yield in that areas. If you would ask me for non-traditional investments, of course, yes, we see also very positive environments for hedge funds, and also depending on the regions, we favor real estate.
April saw a significant sell-off in commodity markets. Can we expect a near-term recovery, and do specific commodity markets offer more upside potential than others?
In contrast to equity markets, where we are overweight, we stick to our neutral view with regard to commodities. Physical demand by the real economy is very important for those markets, and this is not what we expect to happen just in the next couple of weeks. However, if you have a closer look into the commodity markets, you would see that there are some commodities which profit more from the current supply-demand balance. Oil, for instance, is such a case. We see that oil supply is peaking, demand is increasing, and therefore, if you invest in commodities, oil should be on your agenda.
Foreign exchange volatility has increased since the beginning of the year. Do we still prefer emerging market currencies?
Absolutely. FX volatility has increased mainly through the actions of the Bank of Japan. We expect that to happen. Major currencies will trade in a rather broad trading range that offers some opportunities as well. But from a strategic point of view, you should definitely own emerging market currencies. We prefer the Chinese renminbi.
Thanks, Anja. For more information on current market movements and trends, check out News and Expertise on the Credit Suisse website.